The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you. You're listening to the Telltales Weekend Update. I'm Ava Cabot.
And I'm Marcus Graham, the Cash Flow Desk.
Quick note, the show is produced entirely with AI tools, and both voices you're hearing are AI generated. Send feedback through the Substack. This is still a pilot, so tell us what's working and what isn't. And one more thing before we start. This one lands on Father's Day, so happy Father's Day to all the dads listening. We're glad you're spending part of the morning with us. Here's the week in one sentence. The argument about whether anyone will actually buy all this AI compute, that got settled on Wednesday's show. This week, the question flipped to the other side of the ledger. Can we build the supply? The machines that print the chips, the power that runs them, and the memory that feeds them. All three flashed at once. 3 different stories, one spine. The build is now gated by what can physically be manufactured, not by whether the demand shows up. On this week's Telltales, episode 2625, Hunt, Jason, and Mike spent the hour on the demand side. NVIDIA at $5 trillion, the end of the subsidized token era. Who actually pays for the compute? We're taking the other half. The supply chain that has to deliver before any of that demand means a thing. 2 things in this build are genuinely hard to make. One is the machine that etches the chip. The other is the electricity that runs it. Both made news this week, and both made it for the same reason. The demand has gotten ahead of the supply. Start with the machine almost nobody owns. This week, the U.S. government told the company that makes it that one of those machines may have ended up somewhere it isn't allowed to go. U.S. Commerce Secretary Howard Lutnick told ASML's leadership he's concerned one of its top-tier extreme ultraviolet lithography machines may have reached China in violation of export controls. ASML denied it flatly, says it has never shipped an EUV machine to China. This on the same company that just raised its full-year guide to 36 to 40 billion euros on AI demand. Marcus, what does a monopoly on the most important machine in the world actually cost?
ASML is the only company on Earth that can make this machine, and the market has always paid it like one. The memo has ASML at about 62 times free cash flow on roughly $11 billion of trailing free cash flow, translated from euros. That's a monopoly multiple for a monopoly. The export control story doesn't touch the cash. It touches who's allowed to be a customer. And for this name, the customer list is the only variable that has ever mattered. A monopoly is worth 62 times right up until a government starts deciding who it can sell to.
So the risk isn't the machine, it's the map of where it's allowed to ship. And if Lutnick's concern turns out to be real, if a top-tier machine genuinely reached China, the read-through isn't just one company's quarter. It's that the export control wall the entire AI chip supply chain is built on has a crack in it. That's the bigger story, and it's why a denial isn't the end of this one. Now the other hard thing, and it's the boring one, right up until it's the bottleneck: electricity. GE Vernova booked more data center power orders in a single quarter than it did in all of last year. $2.4 billion of electrification equipment orders for data centers in the first quarter alone. Its gas turbine backlog now stretches past 110 gigawatts into 2029, and Bernstein just opened coverage with an outperform, calling it a play on the AI power boom. Marcus, second one. What's the cash say?
The power names spent a decade as widow and orphan utilities. GE Vernova just stopped being one. The memo has it at about 33 times free cash flow, and free cash flow grew almost 400% year over year. That's not a utility growth rate. That's an order book repricing to AI in real time. 2.4 billion of data center orders in one quarter is the tell. The thing I'd watch is conversion. That backlog only matters if the turbine slots actually deliver on schedule and don't slip. The orders are real. The execution is the open question.
Now the print that sets the whole cycle. Micron, page 5 of the memo, sharing it with GE Vernova, power and memory side by side, reports Wednesday after the close. And the question isn't whether they beat. The question is whether there's any memory left to sell, because Micron's entire 2026 high-bandwidth memory production is already sold out, every chip under binding contract before the year is even half over. and DRAM contract pricing is set to jump 50 to 55% this quarter alone versus the end of last year. Marcus, when the product sold out a year ahead, what are we actually pricing?
Here's the trap on this one. Trailing Micron screens at 102 times free cash flow. Ignore that number. It's a cyclical at the bottom of its cash flow cycle, and a trailing multiple on a cyclical at the trough is noise. It tells you about the past, not the print. Free cash flow already grew more than 500% off the bottom, and the forward revenue line is up about 64%. You don't value this on what it earned. You value it on what sold-out capacity earns at much higher pricing, and against that, 102 times trailing is the cheap number, not the scary one.
So the terrifying multiple is the cheap one, Marcus's favorite kind of sentence.
It is, and the supply side is the part the bears can't model. Micron is committing roughly $200 billion to new capacity. You do not put $200 billion against a cycle you think is about to roll over. That's management telling you the shortage is structural, not a head fake. It's the same story NVIDIA's Rubin platform is telling from the other side of the table. Micron is the qualified high-bandwidth memory supplier into it, shipping in volume.
And the hiring backs it up.
It does. Per the Telnexus hiring tracker, Micron is the number 3 hiring floor on the entire board. 3,000 open roles, 181 of them added just this week. You don't staff like that into a cycle you expect to break. The one thing I'd actually watch Wednesday is the gross margin guide. Guide above where consensus already sits, and the cycle's still accelerating. Merely meet it, and the stock's already there. And a sold-out company that only meets is a sell the news.
So what actually breaks this?
Two things, and I'd weight them. The real risk was never demand. It's supply discipline. If all three memory makers turn the capex spigot at once, you get a glut, and the cycle ends the way every memory cycle has ended. I'd put that around 30%. The nearer risk is mix. If high bandwidth memory crowds out standard DRAM capacity, the blended margin doesn't reach what the street's penciling in. Call that another 10%, which leaves the base case at 60, and it's the boring one. Sold out, pricing up 50%. The capacity already committed. The cash shows up whether the multiple believes it or not.
So 30% it ends in tears, 10 it just muddles through on margin, 60 it prints money, and Marcus will at least give you the whole distribution instead of selling you a price target. 81% gross margin on what used to be a commodity. Read that twice. Broadcom and Oracle spent Wednesday's show proving the demand is real. Micron on Wednesday tells you whether the supply can keep up. Same trade, opposite end of the table. Rapid fire. 5 names and markets open Monday. Moderna had its best week in 4 years, and for once it had nothing to do with COVID. An FDA advisory panel voted 9-0 to endorse its mRNA flu vaccine for adults 50 and older, with a final FDA decision expected by August 5th. The stock jumped 28%. Free cash flow is still negative here. This is an optionality name, not a cash machine, but it's the first real commercial catalyst since the COVID franchise rolled over. 2 reporters sit together on page 17 of the memo, and they're back-to-back next week. FedEx is first, Tuesday after the close. The number that matters isn't the quarter, it's the breakup. The freight spinoff is on track. 80.1% of the shares distributed to FedEx holders, and Freight pays a $4.1 billion special dividend back to the parent on the way out. Add $1 billion of cost cuts this year from the Drive program and a forward guide that just got raised. A cleaner, lighter FedEx is the entire thesis. Nike reports the following Tuesday, June 30th. This is the clearest test yet of whether Elliott Hill's turnaround is real. The headwinds are brutal. A $1.5 billion annual tariff hit that took gross margin down 300 basis points. China down 16%, digital down 14%. Win now has to show up in a number Tuesday, not a slogan. First place it can. Cheniere keeps building while everyone else watches the oil price. It signed a $4.7 billion engineering contract with Bechtel for the Sabine Pass expansion, with a final investment decision targeted for early 2027, and it just finished Corpus Christi Trains 5 and 6, and it throws off nearly an 8% free cash flow yield while it does it. The cash machine of the energy names. And Intel had a genuinely good week on the factory floor, which is the only place that matters for this story. its 18AP process entered risk production, 9% more performance at the same power, and NVIDIA is evaluating that node for a future design. No order yet, but the whole Intel thesis comes down to whether anyone outside Intel will manufacture on its leading node, and NVIDIA kicking the tires is the first real evidence in years, and one to file away for the fall. Vertex got its kidney disease drug, Povetacicept, accepted for FDA review this week, its first real move into a major indication beyond cystic fibrosis, with a decision due November 30th. Not a Monday catalyst, but a real one on the calendar. That's the show. Wall Street's consensus on Micron heading into Wednesday. 30 analysts, unanimous buy, an average target around 1,015 on a stock that's already there. Consensus says the supercycle is priced in. Consensus has been wrong about memory at every single turn of this cycle. Hiring data this week from TalNexus, talnexus.com. The through line one more time. The AI demand debate is over. Whether the supply chain can deliver, the lithography, the power, the memory is the only question left, and Wednesday's Micron print is the first real answer. Hunt, Jason, and Mike are back Wednesday on episode 2626, picking up whether proprietary data can actually be protected. Download the cash flow memo at telltales.us. I'm Ava Cabot. Thanks for listening. The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security, nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the host nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, express or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The host and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.